If you've been watching mortgage rates, it's like you've been watching a ping pong match, and things continue to change on a daily and weekly basis. Well, in this video, I want to talk through not exactly just how substantial the recent changes we have seen are, but also what the expectations are, the consensus is going forward through 2024 to help you make better decisions. Before we dive into what we expect over the course of 2024, I want to rewind a little bit, because what we've been seeing over the past 45 days or so is very, very similar to what we saw at the same time last year in 2022. So here in 2023, we peaked around, honestly, about 8.5%, 8.25%, depending on the loan type. But that was substantially different than where we were in the spring, even in the summer. So we rose all the way to the mountaintop, and then we saw it fall off a cliff. We're down here sitting in the high to mid sixes at this point. A lot of that has to do with the Fed announcements that there's not really the expectation that they're going to be raising rates. So this is really a change of expectations. The market has pretty much already reacted. Whereas last year, it was very different. There was an expectation that there's going to be a recession within the next 6 months. And as a result, mortgage rates and all the underlying things that change them and react to them from an investment world standpoint reacted. So what we then saw in the beginning of 2023 was not only did they dip, but then they went back up. So I don't want to celebrate yet, right? Not declare victory that this is the lowest or the highest that we're going to see for now, because things are going to change, right? The Federal Reserve has been very clear that their position is always going to be determined on a monthly basis by the data that they see regarding inflation. So point being, right, we're seeing what we saw last year, but I'm hopeful that instead of rates rising again, we're going to see a different outcome. Now, consensus-wise, between National Association of Realtors, Freddie Mac, and a bunch of different organizations, they're all expecting by the end of 2024 rates to be just around 6%, not below, but not in the high sixes either. Now, only time will tell if that's going to be correct. And it's a little bit crazy to think that when they put these predictions out, some in November, some as late as a few weeks ago in the beginning of December, most of where they had said we would be in the second or third quarter of next year were already there, right? At the time, rates took a huge decline after the Fed meeting about 10 days ago. Most, actually all of those predictions and projections were created prior to that meeting. So what am I even trying to say here? We have seen expectations change and pivot all over the place. I've talked to a few buyers recently who honestly have gone to the other side and said, you know what? Rates are falling so quickly. I'm a little bit nervous that I'm going to end up with a high rate and have to refinance. So if you're in that ballpark, right, where you're trying to catch the falling knife or not trying to catch the falling knife, my guidance would just be do not expect that rates are going to plummet, right? There's no expectation by anybody out there in any related industry that we're going to be in the fives. Does that mean that there's a 0% chance we're going to be in the fives? No. But I would not make a decision based solely on waiting for the mortgage rates to bottom out, right? That timing exercise, while you can get lucky, it's certainly not a smart way to do this. And again, most of you watching this are looking for a second home. Some of you are looking for a primary home. The mentality, depending on which camp you're in, is going to be a little bit different. But in either case, this is a want. Being in Ocean City is a want, usually not a need. So that said, your motivations are going to be different than many other people who are in the marketplace, but there's one thing that's going to be very consistent. The lower that rates go, the more people are going to step back in who may have stepped out over the past 6 months or so. I've seen that personally. I know other agents that I talk to routinely have seen that personally, people coming off the sidelines and getting back into the mix. And as a result, in the last video that I put out, my expectation was that inventory was going to fall roughly 15% from the beginning of December to what we're going to see on January 1st. And we've already seen that decline, not 15% just yet, but it's trending in that direction. So even if mortgage rates plummet to something that is exciting to you, whatever that number may be, the lower it goes, the more competition there's going to be. Now, over the past year, I know other agents and some of you, if you're in the Tips for Buying an OCNJ group, have sent me screenshots of your conversations with some other agents, which always cracks me up. Basically showing that they were being pushy, right? Of, hey, look, here's what's going to happen next spring. You better buy now. If not, there's going to be 2021 all over again, right? You're going to have to waive your contingencies, no inspection. I believe that there was always some kernel of truth in that. There's no way to know for sure, right? None of us have crystal balls. But the key here is that it's presented in such an abrasive way that your defenses automatically go up. And I don't think that does anybody a service. I don't think that that helps anybody. So my goal here is not to tell you, hey, look, you better buy now or you're going to miss the boat. I would just encourage you, as always, to keep an eye on the inventory, to see if there's something that would make sense that is appealing to you, and adjust accordingly and make a decision on a property by property basis accordingly. If you're trying to time the market on prices or mortgage rates, and you've been trying to do that because most people usually don't get off that train of thought, it's just something that's baked into them. You're probably not feeling great right now. And over the past few years, you've been waiting and waiting. And here we are, right? Prices are substantially higher. Mortgage rates are substantially higher. And despite the mortgage rates going up, prices have not come down. The other part of this coin is that, like I've said last year in all the predictions that I've ever made, inventory is the other key component to this whole thing. Mortgage rates is a big piece. And if the consensus is accurate, 6-ish% is about what you should expect, which is about half a point, give or take half a percent better than we are right now. And that's not immaterial. But in my opinion, that's also not a large enough spread to where I would recommend, or that I believe anybody should hold out until that comes. That's simply going to allow more competition into the marketplace and could result in you having a lot more stress than is necessary in this process based on the market dynamics changing. So inventory wise, and this isn't my predictions video, that one's going to be coming next, but inventory last year, I had said, hey, look, we would need to see about 350 homes, which is still well below the average here, which was closer to 500 at any given point in time. If we saw 350, that may be enough for prices to start to come down and adjust. We did not even reach 300. I don't expect a markedly different picture going into 2024, even if rates do go lower than we anticipate. And some of the sellers who are holding on to their 3% and will only move if it makes sense financially, even if the rates go low enough to entice them to get back in, that's really a 1-for-1 trade, right? One home will come on the market, one home will go off the market. So I don't see a white knight coming in to increase the inventory. That's the only thing at this point that I believe would make prices adjust in any meaningful way. Now, despite demand likely being higher, with mortgage rates again being in the sixes, and that's where they're anticipated to stay throughout 2024, with kind of a slow trickle over the first half and then a slightly larger trickle in the last half. If that comes to fruition, then that demand, depending on when it all happens, again, is likely to pick up. I know I sound like a broken record at this point because I've been saying it for the better part of the last 12 to 18 months, but I believe that this is our new normal here in Ocean City. And I'm not concerned with other markets outside of Ocean City. The national averages don't necessarily correlate to what we see here. But if you are interested in buying a home, owning a home, or selling a home in Ocean City, you'd be wise to pay attention to these things, to look at the numbers, look at the statistics. And personally, I'm going to pat myself on the back for the first time here. I believe that I do that better than anybody in the market. So if you have any questions, you want to talk through your decision-making thoughts, your process, your timing, I'm more than happy to chat, share what I know, and hopefully help you to make a better decision, whatever you decide to do. So with that said, thank you as always for hanging out with me. If you haven't done so already, please make sure you subscribe, as well as like the video if you found this helpful. Thanks again, and I will see you next time.